Hello subscribers, welcome to the daily market analysis. Markets have seen a huge comeback in yesterday's session, and as if you remember, I have highlighted time to book profits into the yesterday's session. We saw 16,575, 580 being tested, which was at the upper end of the channel. We'll discuss that. Before I start, let's move on to the daily chart of Nifty first, and most importantly, if you highlight over here, the Nifty closed right at 200 days average, which was 16,520. Even we discussed this in yesterday's session. And most importantly, if you look at right from 2020, Nifty in first attempt never crosses convincingly about 200 days average. So if you look at after the 2020 fall, we saw a test of 200 days average, retracements, and went again higher. Back in 2022, we saw attempt to cross higher, but it failed. Then in the second attempt it crossed. Now in 2022 June it failed to cross. We saw a downward, and now again it's been testing. So if you look at history is repeating, this is again a second attempt, or probably we may see a retracement and then again move on to the higher level above the 200 days average. If I move on to the daily, if I move on to the hourly chart from daily, look, using top down approach, the most importantly, we has held this rally right at the upper band of the channel. If I just connect the channel right from over here and look at the momentum, it halted right at around the upper band of the channel. And if we are following the harmonics, there is an important harmonic being formed. If I just draw this, there is a bearish 3 drives which I have posted in Telegram group yesterday as well. And generally this is the bearish AB 3 drives, where the retracement is 61.8%, and generally the upper band retracement tends to be around 161. This is slightly bit higher compared to the 161. It's 175, 180. Though the points, if you look at the point wise, it won't make a big difference, 10-15 points here and there. And considering the 16,000 index, 10-15 points doesn't make a big difference over here. So if you look at the price pattern, with the price action, there is also a time theory being used. So it is very, very important that the price and time indicates the huge reversal structure. So in today's session, as I said yesterday also, there could be the bearish structure. Most importantly, this will be the gap which will be acting as a huge support zone for bulls. And if I just consider, just as of now, I considering that if this is a runway gap right at 200 days average, this could be the again a bullish rally. And if you remember last week, what I had done a video is indicating that the point and figure chart indicates 16,900, and I'm still in the view that markets would be higher. But as a trading point of view, probably I think that there could be a gap fill which is around 16,350 levels, and then we may move higher. So as a trader, 150-200 points move could be very, very important for a short-term trader looking for a 1 to 2 day trades. But being an expiry on Thursday today, I think 16,450, 445 will be a key important support area, because if you remember, if I just look at the derivative structure over here, yeah, 16,500 put have been aggressively returned in yesterday's session. So and if you look at the average was somewhere around 60-63 points. If I just look at the average price, so I believe if 16,440, so 150 levels are breached in today's session, these put writers may come into the panic, and we may see a shift from 16,500 back to the 16,300 levels, or probably 350 near the gap area where the support is placed. So it may be a writer's day today. 16,635 on the upper band, if it not crossed, I believe there could be a possibility that we may test the gap to fill at 16,350 and 16,245, which I have indicated as a trailing stop loss in yesterday's video. If you remember, that could be the one stop loss one bull should look at in the dips. And still, if I just go on to the Heikin Ashi bar, which I generally follow as a trailing system, yes, 16,322 will be a key support area. Look at the size of this bar. When the length of this bar indicates the bigger move, if you look at the similar lines over here, if I just show the chart, if you look at this the low of 16,113 took a huge support over here before looking at a gap down. So yes, this will play a key important role. If I just look at the historical moves, look at this, the support has been very stronger. So this big candle lows of 16,322 will be a good buying opportunity for bulls onto this dip. And again, as I said, stop loss would be 16,245. Till that levels are holding, we may see upward momentum. And the fresh momentum as a bulls, 16,635 till is not crossed. If I just look at the upper band of the channel, I believe look for a short on rise, keeping a stop loss of 16,635 in for a trader's point of view, and look for 16,350, 16,400 as a profit booking area for a short. And probably if you are looking for a long only setups, keep look at this level 16,320 to 320 to keep maybe a key support area for bulls. Signing off and have a profitable day.